Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right.
Hello,
I'm not sure if
Bruce.
I got that intro just right or not. For some reason, it seemed like it comes on at a different time, but who
Keep
knows?
practicing. You'll get
You
it
know,
right.
you know what? That's why I'm an expert at mortgages and I'm not that good at technology.
There you go. There you go. No
Hey,
worries.
listen, I got 3 things I want to cover today.
Yeah,
I
let's
want
do it.
I want to cover things that are affecting the real estate market or impacting the real estate market. I want to talk about tariffs. I want to
Mm-hmm.
talk about interest rates.
Mm-hmm.
And I want to talk about people that think that home prices are going to crash. Okay.
Sure.
So
Sounds like fun. Let's do it.
sounds like fun. Listen, well, you know what? People need the truth though, Tom, and that's why we're here.
They do.
So let's knock it out. So we know that Trump enacted all these tariffs and it sent the market into a tailspin, and the stock market took a big dump and the bond market took a dump, and nobody liked tariffs. But let's talk about tariffs and how they're going to impact us now and in the future. Okay.
Sure.
So when the tariff thing happened and we saw the stock market take a plunge and the bond market take a plunge, we lost ground. Our 401ks, our savings took a big hit, but it
Yep.
also affected the bond market, which is usually a teeter-totter effect, but it affected both,
It
right?
affected both.
So
Yeah.
in the course of a week before last, we lost 155 basis points. Now we gained about 45 basis points back last week. This week, starting today, the market's already off by 13 basis points. I'd like to see that recover, but that's not horrible. But I do see a pattern that we could get a little worse this week before we get better. Just
All
going to
right.
tell everybody we could get worse before we get better.
So anybody that's getting a loan, this may not be the week to lock.
It may not be the week to lock. The best thing to do is to contact me and let's look at how soon do you need to lock? Because if you're closing next week, you may need to lock now before it gets worse, because it
Right.
might get worse, right? But if you're
Absolutely.
closing in a month from now, we might have a few days to recover. But I'm watching patterns and I see that maybe tomorrow might be a little worse. Then we could spring back again.
All right. We'll keep an eye on things there.
So tariffs have affected the market. There was a giant bond sell-off. Now, the government had intentions because they have these regular scheduled bond sell-offs, and they sold $30 billion worth of treasury bonds just to recoup money. But we had a little surprise, at least we thought it was a surprise, from our friends over here in China that are holding a lot of US treasury bonds, a lot. They could really damage our market if they really wanted to. I don't think they wanted to. I think they just wanted to show us that they could.
Sure.
And so they then had a big sell-off, and that pushed bonds even down further.
Gotcha. And on the housing side, obviously existing homes are existing homes, right? They're already in the pool. They're already in part of the market. But one of the key indicators of prices is going to be how much it costs to build a new home, because we don't have enough inventory. I know we have extra inventory now in the market, but we don't have enough inventory to take care of the demand that's coming up, right?
No, we don't.
People coming into the market. So
we're
new home construction
400,000 homes short nationally.
I thought it was 4 million homes short nationally. But so the home builders are actually estimating that the tariffs are going to add an average of around $9,200 to the cost of a home. Now, in the grand scheme of a $400,000 or $600,000 home, an extra 10 grand isn't a great deal, but every dollar counts, and that is
$60 a month.
And that is going to push the home prices up, at least for new homes, or help them maintain. Maybe the builder can't cut as much or supply as much incentives to buy because they have less of a profit margin. So,
well, and they're already having to give builder forwards for reduced interest rates, pay closing costs. How much more can these builders take a hit on? Right.
Exactly.
I'm going to come back to this because I think this is important, but we can tie it into number 3. So number two is interest rates. So these are another thing that concerns people right now. They're like, it's all about affordability.
Hmm.
So it's really the interest rate may appear to be their problem, but it's really the payment that's the problem. And when you combine that with homeowners insurance and taxes, you'd be surprised how much of that payment isn't really the mortgage payment at all.
Oh my gosh. Yeah.
However, interest rates are double what they were used to during COVID. But COVID, you got to take that and chop off the low and chop off the high. So we're never going to see threes again, but you probably won't see eights again either. So let's just start from 7.5 to 5.5. We're somewhere in the middle of that. We're 6.5%. That's
Hmm.
not so horrible right now, right?
No, it's a historically average rate.
It's
You know,
lower than average. Historically, average is 7.49.
there you go.
So we're almost a 1%. We're about 3/4 of a point lower than the national average, but people still feel it. So we can't invalidate their concerns.
Oh,
It's still
absolutely
a
not.
feeling. So are you seeing sellers paying closing costs right now?
Almost 100% of the time now. It was increasing over the last couple of years, and it's almost exclusive. Outside of like a serious distress sale where we're giving the property away and things like that, homeowner buying a house, yeah, they're getting closing cost credits. They're getting prepaids paid for. It's maybe it's not 100%, but it's going to be in the 80 to 90%.
Yeah, it's a high percentage people
Very
getting
high
closing costs.
percentage.
I totally advocate closing costs versus reduction of price. It'll
Oh,
make a much bigger difference out of your pocket, and it won't make
absolutely.
that much of a difference in your payment. So that negotiate closing costs. But what about temporary buy downs? Because I don't see enough people really looking at that. And I think that's an opportunity to get that, even though you still have to qualify at today's rate. I locked a client in the other day on a 2-1 buy down at 4.75% for the first year. So the seller paid it 4.75, 5.75, 6.75. By the time it gets to 6.75, we could easily see that interest rates have fallen. But even if they don't, you still got today's rate.
Right, right. Yeah, I mean that's definitely a good tool. I don't use that one as often as I just use closing costs and prepaids. And I think when I push closing costs and prepaids out there, sellers push back, right? So, they don't want to pay all of it or they only want to pay a certain amount. And so trying to get them to come up and above, I think you would need to be you would need to have a seller that's somewhat desperate or as I say, massively motivated, right?
Or again, you keep your price high. Don't reduce your price.
Oh,
Get
for sure.
more toward closing costs. On a conventional loan, if you're putting 10% or more down, you can get 6% of the purchase price.
Correct.
That's $6,000 for every 100 grand. You could buy the crud out of a loan to buy it
Well,
down with that.
right, but that's assuming the seller's willing to do it, which they're willing to do some, but they're not. I think, in my opinion, I think it's pushing it for most sellers
I
again,
think
unless
you're
they're
right.
really highly motivated.
I think that it's reasonable to get 3%.
Yeah,
It just depends on the seller. You're not going to
which
get
3%
anything if the
usually
house has been on the
covers.
market for a week. You're going to get something if it's been on the market for 60 days.
Right. So, yeah, and 3% usually covers closing costs and prepaids, and
It does. It
it
just won't cover a substantial buy down.
it won't cover a buy down. Right.
All right. So what do you think about the market's going to crash? Real estate's going to just plummet. The market's going to hell in a handbasket. What are we going to do for this? What do you think about that?
I have been hearing some form of the housing crashes coming since 2015. I remember when I was showing some buyers homes right as the pandemic hit, they were all like, "Oh my gosh, I'm going to hold off. The thing's going to crash. It's going to everything's going to be horrible." And then what had happened during the pandemic? Prices doubled, right? So they were completely wrong. I think a lot of people.
I had a realtor telling his clients that don't buy right now. The market's going to crash. I'm like, have you lost your mind?
Yeah,
Have
yeah,
you absolutely, you got the lowest interest rates in the history of time, and yet you're telling people that their market's going to crash? Oh no, it's not sustainable. Of course, the price increase, the appreciation was not sustainable, and it wasn't, because we saw a correction starting February 2022, and
right,
it hit. And it wasn't that prices dropped, it's that they were too high inflated and they
right.
brought back to reality.
Brought them back to reality. That's exactly right. I think a lot of people think that 2008 crash is part of the cycle, and it isn't. That is
It's
not.
not.
That was an anomaly. That was in the Navy, we used to have a drill called a mass conflagration drill. And it's basically where all hell breaks loose, right? And that's exactly what happened. Like 7 forces came together and caused that crash, right?
Absolutely.
And the things that were the problems, the underpinnings mostly in the mortgage industry have been mostly fixed.
Yes. Yeah. I'd say the problem there was that there was not prudent underwriting. People were claiming they were making $600,000 and they were flipping
Mhm.
burgers at McDonald's, and
Yep.
lenders were giving loans at 125% of value
Yep.
with no evidence of income. And
Correct.
I mean, it was the wild, wild west. It was horrible, horrible.
I had heard that during that time that the MLO licensing, all that you had to do was bring a small mirror so that you could check and see if they fogged it. And then that's all you had to do to get licensed. Is that true?
Well, I think that's all you had to do to get a mortgage. And I tell you what, those times are gone. You have
They
to
are.
prove your income. And even on the programs that we have, like DSCRs and bank statement programs, we're still proving income.
Right.
There's still an income stream. There's credit is very important right now. Back then you could have a 580 score and claim you were making $300,000 a year flipping burgers and put no money down. That's a problem.
It's a
And
big
that's
problem. And that's what is the majority of what caused the crash. And none of that's happening anymore. So I think what we're really seeing is more of a normal market where in certain areas of the country, some of them here in Florida, we've seen an overextension of price or an extended of value. And some of those are being reset and corrected, right? Especially on the coast where we've been hit with all these hurricanes.
You get
And
down in
insurance
Charlotte
costs a lot.
County, Fort Myers, some of those areas. But when I look at the areas that are losing value, they're almost all in a flood zone.
Yep.
Okay. Almost all of them. Or you have a snowbird that's panicking because they went through 3 hurricanes, the house flooded 3 times, and they're like, I'm done with that.
Yeah.
Right.
Yeah.
And you know what? I don't blame you. I think you should go back home. And I think you should sell me that house at a nice discount. And I will buy that from you. And I will be happy as a clam because I'll just build it up a little bit higher. And I'm going to be, and you know what? That's what's going to happen. Every time people panic, it's an opportunity for the smarter people.
Sure. Absolutely. So yeah, I see a correction in certain areas where we're overvalued. And I see probably for another year or two, reasonably stagnant growth.
I do too. I think it'll be slow, but we're still at 5% right now nationally.
I know.
So that's not stagnant. That's better than 3, and 3 is an average. All right. Give me 2 reasons that people should buy right now.
Well, there's never a better time to buy real estate than right now. And right now is whenever it is, because you can't predict exactly what's going to happen in the market, but almost guaranteed over a long period of time, 5 to 10 to 15 years, you're going to see appreciation. You're going to have roots. You're going to build equity, right? And it's always been the right decision, and it's almost impossible to time it perfectly.
Number 2 reason.
Number 2 reason to buy a house, there's pride in home ownership, man. People that buy homes tend to be more stable and tend to build wealth over their lifetimes.
They
People
build
that
it
move,
by accident. They don't even have to try.
they don't. And so, I think it's one of the most prudent things that everybody should be doing. I'm actually a little bit saddened that it's only a 65% home ownership rate in the US. I think we need to change that.
And I'll tell you, my number 1 reason, there's no such thing as a rich renter. There you go.
There you go,
I
man.
got to run. Thanks for listening and watching the Monday Mortgage Minute with Tom McNamara and Bruce Woodburn. If you ever need our help, we're always here to help you. I hope you enjoyed the show. Tom, have a great day.
Bruce, make it a good one, brother.